What's up, everybody? Welcome to another episode of Christian Radio. Happy to be here. Good to see you. I'm joined today with my good friend Colin Haueter. Colin is a financial advisor, something that I don't live in that world. I'm hoping that in the not too distant future, I need to enlist his services a lot more because I'm just making so much money and I need him to turn it into more money. So, Colin, man, tell everybody a little bit about you, where you're from, why you do what you do.
Yeah, thanks, Christian. Appreciate that. Glad to be on the show. I'm from Meridian, Idaho. I like to call myself a potato. I was born and raised here in Idaho, and becoming a financial advisor, that was not something that was even on my radar growing up. I grew up on a farm, and I didn't really understand anything more than you put something in the ground and you hope that there's some rain, and if not, you water it and then you grow. The more I've gotten into finance, the more I've realized that it's fairly similar. There's just a lot more rules and regulations. But the principles of hard work and understanding, what you can influence and influencing that and giving up the things that you can't influence, they're the same. So what I do personally as a financial advisor, my interest in it was piqued when I was in school. I was actually studying to become a marriage and family therapist, which please never ask me any questions in regards to that.
I would imagine though that doing what you do now, that probably is a pretty helpful skill set to have, I would imagine.
It is, yeah, especially like conflict resolution theory.
Totally.
Working with businesses when there's more than one owner. I'm not gonna get into the specifics there.
Leave it at that. Yeah. Say anyone who's in business totally gets that, man. Say no more.
Yeah. But no, so yeah. While I was in marriage and family, it became a theme that they'd always talk about. One of the biggest things that stresses marriages might not be the reason for divorce, but one of the biggest stressors on marriage is, misunderstanding or, I guess, lack of cohesion on finance. People can't get on the same page on how they spend what they make, which everyone's felt that or experienced that at least at some point in their life, right? If you've been married or had a significant that you've shared funds with at all. And I've noticed it can be similar with businesses as well, but my interest was piqued, and then a buddy and I started a business in college. We were way more successful than we ever intended to be. Really, it was just cold and we wanted money to buy our season passes to ski that year. And so that's what spurred our starting a business. And then, a couple years later, it was, it had grown beyond what we'd ever imagined. And so we had to learn a lot about taxes and finance. And that pushed me into even more finance classes. And from there, I started realizing I really had a passion for figuring out how to, as you make money as a business owner, as an individual, you realize you have to give a lot of it away, taxes, whatever it might be. Right. And so I started enjoying learning how to, or becoming an expert in how to continue to use that money to make more money, and as well to give away as little as possible in taxes. Now, I'm a fan of roads. I'm a fan of, having a military that protects us. I like all of those things. But
having a fire department's kind of handy.
Yeah, all of those things are wonderful. But let me tell you, I definitely want to just pay my fair share in taxes, because otherwise it can be. I don't feel like most people wake up in the morning like, man, I'm so glad I'm in the 36% tax bracket. And I give
right.
over a third of what I make to the government.
Exactly.
So anyway, so that's really what I do and how I came to find my passion in this career.
That's cool, man. Like I said, I would imagine, I mean, in roles that I've been in before, working with, families and, people doing projects, like, having that, conflict resolution, that like mediation kind of background, I bet is so handy. Like how many financial advisors in our town can say that they are, more or less trained as a, family counselor. I think that's awesome.
Yeah, which I don't publicize this, and now I'm about to say it on a podcast that's going to be public. But my degree is in marriage and family.
You did finish your degree in that? Crazy.
Yeah, with an emphasis in finance. But yeah, I actually, I finished out school with that, and then what I'd talked to a lot of mentors in the finance field as I became more interested, and I had like 2 years left of school, so I could have switched. But they're like, no, finish what you're doing, because you've got the psychology aspect, you've got the conflict resolution, and just take the finance classes you need to gain that expertise. Go past those tests. That's the hard part. Go get licensed. So there's nothing, as a financial advisor, it's kind of surprising. If you know your stuff, you can go get licensed. Kind of like a realtor.
Yeah, 100%. Yeah,
maybe a little bit more difficult on the test side and the regulations and everything you have to know. But yeah, no, it's
on your side for sure. Yeah. On my side, yeah. It's not that hard. It's not that hard. That's why. I mean, how many realtors? Man, a ton. That's why tons of people do it. But like anything though, if it was easy, everybody would do it. In the realtor space, there are lots of realtors, but there's in where I've never. All the time I've done this, man, I don't do houses. Like, I'm not going to try to, list somebody's house or play in that world. I mean, where I've always lived is on the commercial side, where, for me to work with businesses, that, they're expanding or looking for office space. Like, that's what I like to do. And I know, and with you, I know that's what you like to do too, is work with businesses. So talk a little bit about, I know you've done this for a long time now. Maybe tell a story or two about, some businesses, you don't have to say like who they are or whatever, but like, some real world examples of how like you really helped like a business.
Yeah, no, I love that. So there's different stages in the life cycle of a business, and you're familiar with this, Krisjan, right? You have background in owning or at least operating business. But when you first get started, the biggest thing is you don't want to get too cash strapped. You got to have excess funds somewhere.
Yep.
Because if a project's taking longer than expected, and you don't have the cash flow to pay employees or to buy, materials or whatever it might be for your business, if you're not able to pay that overhead, you get in a situation where you're like, okay, now what do we do, right? So, and I feel like that's one of the main reasons that businesses fail. So that first stage, the growth stage, as a financial advisor, what we like to do is, help make sure that one, the business is set up correctly, and then two, we need to make sure that as far as where you're positioning funds that are sitting around in excess, that we're still getting growth and that our tax treatment on those funds is favorable. So on average, when we sit down with the business, we can end up saving them, at least 10, 15% in taxes, just depending on how their business entity is structured and where they're positioning those funds, not to mention, some of the growth we can get them. Now, with safe money funds, with stuff that we need, we're not going to go put that, invest in the market somewhere where we're going to get 10, 15, 20%. So it'll probably be closer to like 5. But if you looked at savings accounts right now, 5% is pretty attractive.
Well, I was just going to say, I mean, in a savings account, what are you getting, like point whatever percent? Like, you might as well put it in a coffee can and put it under your mattress or whatever at that point. That's crazy.
Agreed. Yeah. I feel like the next stage of a business, beyond that startup phase, is the growth phase. And during that growth phase, you're hiring employees. There's a lot going on. The biggest thing that I've noticed is just keeping talent and getting structure within the business. And so, setting up that structure, that's not something that I'm an expert in. That's more on the operations side. But keeping talent, that is one of the places where you're able to get the biggest tax deductions for your business. And at the same time, instead of sending those funds off to the IRS, now you're compensating those employees. Owners are included in that. So there's lots of strategies that we can use to provide benefits. I would say, when I say that, everyone's going to nod their head with me and be like, oh, we're already doing that, or, oh, I already understand that.
Yeah.
You don't.
But are you though? But are you really?
Yeah. No, there's so much that, people are familiar with, the traditional, have a solid retirement plan, whether that's a simple IRA, a 401k, 403, whatever it is, right? A SEP IRA. Those are more common now than they've ever been before. And then health insurance, maybe some life and disability, that's how people set it up. But what they're not familiar with, and the reason for that is there are tax strategies around. You get tax benefits for doing that because they're qualified planning. But you have to offer all of those things to everyone. There are pieces of planning that you can do that you don't necessarily have to offer for everyone on the same level. And that's where you can get a little more strategic. If you have a couple employees that are driving revenue for your business, you want to compensate them. And we can still do that in tax favorable ways. You might not always get as big a deduction, But when it comes to, the labor market right now, keeping talent it's huge.
Oh, dude.
Um,
Anybody who's been in business knows that it's and I don't know the exact numbers, but it costs exponentially less to keep an employee as it does to let an employee go and go find somebody else and train them and onboard them and do all the stuff. And it doesn't matter what the industry is right now. I mean, talent is where it's at. I mean, you open up your favorite news app, and that's what it's about is talent and people leaving jobs for all the different reasons. And so anything that any company can do right now to help keep people, I think is a very, very smart play.
Yeah. And it's wild. Most people think that adding some of those benefits is going to be really expensive. We had an employer come to us and like, hey, we need a 401k. We don't really have any extra money. How cheap can we do it for? And after the tax credits walking away, I think the first year they spent less than $1,000. And ongoing, it was going to be about $1,000 for them. And that's it. Like everything
total, not per employee,
total.
not per month, whatever.
Nope.
$1,000. That's crazy.
Around $1,000 a year. Yeah. Nice. Now, is it a bare bones 401k? Is it really going to do everything that a 401k should do? Maybe not, but that's one of those things where the flexibility is there. And as that company grows, we've added on to that 401k 3 or 4 times. Now we've got a match. Now we've got a profit share, and so that's one of those things that I'd make a plug right now around 401ks. Most people think it's kind of like a one and done.
Yeah.
I like to think of them as like living, breathing. If you're not updating it, at least biannually, taking a look at it and maybe changing the funds that are available or adjusting the match to fit your business or profit share, or there's so many different little pieces of that that you can use. Eligibility to participate, you can change, and there's levels above the profit share as well that you can add on that people aren't familiar with. So anyway, they're fun when you understand them. I know people hate 401ks because they think that they're slow and clunky, and I agree. They're not the place to get your biggest investment return, but they're a tool that if you use the tool correctly, it can definitely have a value and a benefit for you. So
that's so crazy to me. The fact that you can get this company got into that for $1,000 and say it again. And because I said it quickly and I want to make sure I heard this right because I like what we said. I mean, somebody like me who's done a lot of websites and stuff, and kind of like with website development, some people think you put a website up and boom, it's done. It's it's the static thing that's just there now, but it should be changing and evolving over time, just like a 401k.
Yeah, 401k, definitely all group benefits, but a 401k, the qualified plan, I'll just say that because whether it's a simple IRA or a SEP IRA, we have a lot of employers that we work with. They're like, hey, I just want to start with a simple IRA plan because everyone knows, that's $10 an employee and per year, and you can have the employees pay that if they want to participate. Sure. So that's like the ultimate starting plan, right? Like, hey, we're gonna spend $10 per employee to set this plan up. And then you can do like a 3% match there if you want to, dollar for dollar. Beyond that, the 401k, if you start with just a bare bones, kind of the minimum 401k, with the tax credits available right now, you can pretty much get one of those set up and running for $1,000 a year, which that surprises a lot of people. Your tax savings for an owner, if the owner or anyone contributes the max of $20,000. Let's just say you're in a 20% tax bracket. You can do the math there, but $20,000 and you save 20% on that. That's a fifth of that $20,000 that you saved in taxes. So you put money away, but now you've got major tax savings, and the business owner's tax savings alone can pay for the 401k. So don't want to spend too much time on that, but it is one of those tools that is probably underutilized just because, everyone, when they think of a 401k, they think big, clunky, and kind of underwhelming as far as investment returns, which I won't argue any of those points. I think there's value to all of those thoughts, but I do think that they, just like any financial tool, that's probably my biggest thing as a financial advisor is I have people come to me all the time. They're like, hey, what is the one thing that I should use? What is the one thing that's missing in my portfolio?
I was going to do one smart thing with my money, man, what should it be? It's
the whole game of finance. And I probably shouldn't call it a game, but to me, it almost has become a game, because what you need to do is learn the rules, and learn all of the tools and how they work. And then you use each one appropriately. You know, someone who's only using a 401k for retirement, I'll go on the record as saying that's stupid. You should not do that. You should not only have your 401k for retirement. You'll end up being really surprised when it doesn't work for you how you thought it would. But if you understand how to use your 401k effectively, maybe even leverage that to create returns in other ways. I had a business owner who, I'm not recommending this for anyone, but business owner who liquidated their 401k or took a loan on it in order to open a self-storage facility. And in the first 2 years having this self-storage facility open, we've already contributed more back to their 401k than they had in their previous 401k. After working for like 20 years, right, for a school district. I guess it was a 457. But anyway, this business now, they could sell it for $5 million, or they can continue to milk it and put money in different places, and they're hardly paying anything in taxes because of the way that we have it set up. They're not taking a ton in revenue, and so or in profit. I apologize. And so because of that, they were able to use their 401k to leverage to create other wealth, and that's really where I like to think of each vehicle, whether it's a Roth IRA, everyone knows what that is, whatever it might be, any financial instrument, a captive, you can use it to gain the benefits, but if you overuse it, it's clunky. It's not going to work for you.
Yeah. Just to reiterate though, I really like what you said about, a 401k and not just being a set it and forget it type tool where you need to revisit it at least a couple times a year, make sure it's doing what you need to do, update it, change it. Because in my past, work history, when I had a 401k working for people, it was a full set it and forget it thing, man. It was set up and I sort of forgot now that I think about it, I'm sure I have an employer from a long, long time ago that I'm pretty sure I still have one out there somewhere that I need to figure out if, what to do with it or whatever.
Oh man. And that's one thing I'll throw out there too. Rolling over a 401k is probably one of the best decisions you can make in most circumstances, especially with this whole backdoor Roth IRA thing closing for next year. There's no reason to have 401k sitting around out there. Roll it over into an IRA. You'll potentially get a lot better investment returns if you invest correctly, and actually have a strategy. And then you have access to it if something, happens or goes wrong. You can leverage it. If you're a business owner and you have old 401ks out there, oh my goodness, shame on you. You can use those in so many ways if it's just out there sitting around. Krisjan, I do need to throw out there, you've talked about 401ks living, breathing a couple times, or reiterated what I said. I guess there was a change recently made. One of the biggest pushbacks that I get from business owners around 401ks setting one up for their business is, I don't want to be the fiduciary. Most people are familiar with like a simple IRA or a SEP IRA plan. Each individual has their own account and they're responsible. But with a 401k, the business owner is the fiduciary. And so if something goes wrong in the investments, and this happened a lot, business owners that I work with that were around in 2007, 2008, everyone remembers the crash and the craziness. And people were suing their business owners or suing their employers because, my 401k went down. And that's your fault because you're the fiduciary. And they were right and they won. And with this last little dip with COVID, a few cases popped up and the government decided, hey, we want to do something. So what they've done is they've required or mandated, most people are familiar with a TPA or a third party administrator to write the plan document and to manage the compliance of the 401k. They've added another third party that is now going to manage or at least put a check of approval over the investment selections. And what's going to happen here is, because they are the ones putting a check or their mark of approval on the investment selections, they are then liable for or responsible for if something goes wrong there. So if, I as the advisor propose, hey, these are the stocks, these are the mutual funds that I want to have available in your 401k to this business owner. He says, yeah, that looks good. We go get that third party check of approval. I'm going to swallow the cost for that as the advisor. Some advisors won't, they'll probably pass it on, but it just depends on, how things are set up for them.
Sure.
And then,
or how big it is or whatever, probably.
Yeah. Or how big it is. But then, they're no longer, as far as fiduciary responsibility is concerned, the business owner is no longer liable. Now, the piece of all this that, has caught my attention is, when the regulation came out, there was not very much, talk about it, no chatter or anything, because it seems really small, but they put into the verbiage that basically, if you don't have someone check off, yes, your funds are good, on existing 401ks as well as new ones. So this is, not going to grandfather people in and say, hey, you're good because your 401k is already set. This is like, hey, go back and do this on all of your 401ks. If you don't get that box checked by the end of December, in most cases, some advisors have until February, but till the end of December, your 401k is considered non-compliant, and there can be some really negative things that can happen for having a non-compliant 401k, fines, things being shut down, corrective distributions.
In that non-compliance, whatever penalties or whatever come with that will be on the business owner at that point, right?
Yeah.
Crazy.
So that if your advisor has not talked to you about this change, and you have not had a third party come in, review your fund choices, your fund decisions, and give that check of approval, and this is not just like your routine, hey, our annual review. We can't do this. A financial advisor cannot do it for their own 401ks that they manage. It has to be a third party. And I think there are 5 right now that have been identified as, these are the ones that you can use to do this. And how
what types of entities or whatever are these third parties?
I can get you a list afterwards, but really they're companies that's what they do for a living.
Okay.
It's kind of
I don't need to know like specifically who they were. I was just, are they just like some other financial advisor or whatever? Like,
oh no, this is not financial advisors at all. This is like your kind of investment guru people that'll look at and see, hey, is your portfolio balanced? Are the options that you have available? They're kind of, I would say they're analysts. So they're going to look at it and analyze and say, okay, if your clients, or your clients, if all of your employees are invested in these funds, we don't think anything bad can happen, right? Or you're offering enough choices, you're offering enough variety and diversification. So
interesting. And that's a whole business right there, just doing that.
Yeah, completely. New industry that just got opened up. Basically, there are people that were already in it and already doing it, but where it was kind of something that's optional, and some people had it on theirs and some people didn't, now it's been mandated. And I would tell you, the lion's share of 401k providers out there are, they're a smaller firm. They've got maybe 8, 10, 15 401ks that they manage, and they're not watching the regulation super closely. And those are the people that are going to be in trouble, where, with this change, suddenly they have to go get this check of approval. They don't have anything set up. They don't have anyone telling them, hey, these are the ones that you should use or whatever. Those 401ks are going to be non-compliant. The business owners are potentially going to get hit with fines, and no one's even going to know what happened. They're going to be like, what? Like,
where did this come from?
Yeah.
Crazy.
So, and that deadline, like I said, it's about a month away. So
yeah, that's real soon. There you are. You're back.
Apologize. Had a call come in for a second. Yeah.
Nice. So I'm interested in that. So obviously I know, like, in your industry, things, regulation wise and all that changes a lot, and probably changes really fast. How do you, what is the vehicle for you to stay up to date on all of that stuff?
Yeah, no, and that's a great question. So this morning, and at least once a week, we have an overall briefing from our investment strategist and his team in Milwaukee, Wisconsin, Brett Schutte. You can look him up. He's incredible. In fact, he's always being asked for interviews on national television, to talk about market movements and stuff like that. But we have briefings coming from our home office all the time. And that's really where I get a lot of the information. But it's just like school, where, if you just take the information that your teacher hands you and prepare for the test, that's one way to educate yourself. But if you actually take that information and go look it up and read both sides of the story, you're going to learn a lot more. And so that's where I find a lot of the loopholes, and where I kind of like to position myself as a strategist, or not necessarily a financial advisor, but I take care of, helping you make all of the best decisions for your business, not just managing your funds, because I'm aware of, both sides of the story. So why are the regulators doing it? Why are they making the change? Does it open up any potential loopholes? If so, how can they be used effectively? So I'm not overly creative, because I never want to get my license taken away. So I'll never do anything shady. But as far as understanding how things are used and being creative with them, you will always find me playing in that realm. That brings me to captives, which I think I've mentioned a couple times, just in passing with you. But they're starting to gain some traction a little bit more now, because there was just a big case. Someone, the IRS audited some business and said, hey, what you're doing in order to save on taxes is not, you shouldn't be doing it. And so it went to court, and it was upheld that what they were doing was actually okay. So captives have kind of become this, previously, like, there's not enough experience out there, where people are a little nervous to do it, because they're like, like, if we do it and the IRS audits us, like, maybe we'll get in trouble. But now there's been a couple precedents set where, no, this is okay. And so if we want to dive into that a little bit, we can. If you don't have, I don't know if we have to get all the way down in
the weeds on it, but maybe give me a little bit of an overview on
really surface level. Any business that's making over $1 million, that's where these become really effective, because what happens is you're able to take funds that the business is making and write them off and pay them to another business that you own. So you nest a business underneath your current business, and it's an insurance company. And now the first question I always get is, does this have to do with the life insurance stuff? No, it doesn't. This is completely separate. The insurance company that you nest underneath your company, its job is to protect against risks to your business that are going to, stop revenue, make it impossible for you to continue to operate. So things like COVID, you can protect against, business interruption risks or whatever, things that aren't covered by your normal P&C guy who writes his business policies on your business, right? So the first step is understanding your business and what risks, could be mitigated. And then from there, we write it up, build this, this business underneath your company. And I say I don't actually do these. I just have an awesome contact that I use that helps set them up where it's appropriate. But what you do is you write those funds off, pay it to your business underneath your captive, I guess, your small insurance company. And that insurance company then protects your business. Well, all of those funds that you wrote off as premiums and paid, because it's premium and your insurance company is still on the hook for it, it's not income. So you don't pay taxes as it for income to the first business, your business, or to the captive. So you're mitigating the taxes. It's a deduction. And then from there, after it's held in reserve for a year to pay out claims that could potentially happen, then it goes into surplus. And at that point, long-term capital gains taxation is the worst taxation treatment that it can receive. But depending on what we do, where we put it, what you use it for, business owners will take loans on that and go get commercial property, or have a business owner that purchases a lot of trucks. They do a lot of trucking. And so they'll take the down payments for their trucks out of their captive's surplus. And so they can leverage these funds that they didn't pay taxes on as profit. They paid it as premium to their insurance company. And now this insurance company didn't have to pay a claim for a year. And so it goes to surplus. Those funds are just free for them to use for whatever. Right. So,
dude, that is so interesting.
Really,
and are a ton of businesses taking advantage of this right now?
Like I mentioned earlier, because it's been one of those pieces of tax code where, the accountants who are non-creative, I would say, have always said, like, that's way too dangerous. That's like that portion of tax code is it's too vague. Like you could get in trouble doing that. It's going to trigger
an audit every time.
Yeah, exactly. Sure. That's not the case anymore because of the precedents that have been set. I'll go on record as saying, I think at some point captives will be almost as common as 401ks with business owners. I think it might even be the first step for a lot of businesses. They might go to a captive first, and then add the 401k after.
Yeah, I mean, to be able to insure your business against like whatever might happen to keep you from making revenue is so smart.
Yeah. So you get the insurance for your business, and then if a claim goes out, you're joint on the hook. So you're on the hook with the premiums that you've paid. You can use those, but you also have the backing of an additional insurance company that you pay a fee to in order to have the captive, right? So there is an aspect of like anywhere between an 8 to 10% fee on the funds that you put in, but that fee means that you're joint insuring. So this other insurance company helps you pay your claims if something actually happens, which is incredible.
That's so crazy.
Yeah. Otherwise, that money just goes into surplus. You don't pay taxes on it. You use it for whatever you need. That's so cool. Crazy. Yeah.
Yeah.
It's powerful.
Keep me in the loop on this because that seriously seems like one of those things that once it gets some traction, like I said, it's going to be commonplace. Like it makes so much sense.
Yeah. Can I say Boise, Idaho is one of the few places where it doesn't have traction. All the Fortune 100 companies, all the Fortune 500 companies, they have tons of these. They've set up captives. And then once that one's kind of maxed out, they'll set up another captive. And so they've been using these for the last 20, 30, 40 years.
It's been that long.
They've been around for a while. They've been used for, I think it was the 80s when it became really a thing, like 86. Don't quote me on that, but around then. And so they've been around like close to 40 years. I think Boise is kind of one of those slower to adopt places.
No. On Boise being behind the times on something? No one's ever said that before. That's crazy.
I love Boise. I'll never move. I'll live here for the rest of my life, partially for that reason. But yes, when it comes to finances and business owners and how they run their businesses, I think this has been adopted on a large scale. My clients in Texas and Arizona, they don't bat an eyelash when I bring it up. They're like, wow, this is amazing. Let's do it. And we implement it, right? Boise, sometimes I'll get a little bit of pushback. Now, maybe that's just because I'm from here and, no one's special when they're in their hometown, right?
That's true, dude. That's true, man. That's true. That's totally true.
But no, captives are really cool. And I think, if you're a business owner, you're making over $1 million and you haven't looked at it, that's on you. Once again, like you need to understand how it can benefit your business. It might not be a good fit. There's a huge chance that it's not, but where I don't get compensated to set a captive up, you can be sure that there's real value for me in having my business owners have these. So
interesting. So other than, the obvious, potential tax or potential like, not tax, but potential like audit or whatever with the captive, what are the other potential, like other than that, why would somebody not do it?
Pros and cons. So, I guess that if you push too much money into a captive, then it goes into that long-term capital gains tax treatment. If you do then still show a lot of income, your long-term capital gains rate can go up as a business, and it can become, I guess, overfunded at some point. So pushing too much in would be one of the risks. One of the reasons, and this is over time, it's become less expensive to do a captive. Starting out, you used to have to pay $125,000 to open a captive. Now you can do it for $5,000.
Crazy.
And it's completely insane. So that was the other reason why a lot of people would look at it and it's not worth it.
A ton of money, man. That doesn't really make sense for us.
Yeah. Right. We'll save 200,000, but we're gonna have to pay 125. Like it's not worth the sweat in order to save that 80 totally. 75,000 or whatever, right? But now where it costs $5,000 to set it up, and then you've got that fee in order to co-insure of 8 to 10%. It gets lower than that depending on how much you have that you're paying at premium. But anyway, the fees, overfunding, those are really the two biggest concerns outside of previous to these precedents being set, the potential of an audit. So, but every captive, every good captive person that can help you set one of these up, they will include in it a guarantee where they will be the ones to go defend it in court.
Interesting.
And so, if you do set one up, you shouldn't be worried about, as long as they're doing their job correctly, you're not going to get in trouble for it. So,
Well, that's
Yeah.
super cool, man. Yeah, no, I'm glad to know more about that. That's super cool. What else, man? What other any,
Oh my.
sweeping changes? Anything that people should know right now that, right
Yeah.
before the end of the year? Like if somebody hasn't done anything in a while, like what's, maybe one good super solid piece of advice you could leave people with right now.
Yeah. And I just posted about this on my story on Instagram. I think the most foundational piece, and you're probably hoping that I go to some fancy thing. I'm going to go back to the basics, back to the foundation, because we've
Back to
talked
basics,
about a
man.
couple of
Yeah.
fancy things. Yeah. Um, you need to understand as an individual or as a business, one, how you're going to get taxed, and two, what bracket you're in. So where, depending on where you put the income or how you show the income, it can be taxed differently. And then depending on that, you can find your tax bracket. Now, understanding those two things, which maybe you talk to someone like me who does this every day and actually enjoys it, finding those things out for you.
That probably makes a lot of sense.
Yeah. But understanding those two things is going to completely change your financial situation, because if you have your income positioned in the right way, where it's being taxed how you want it to be or how you choose for it to be, and then you understand your tax brackets, that's where, I've saved someone, an individual, $1,500 in taxes just by adjusting how they're contributing to their 401k, because they made some raises over time. And now, putting money away that they were doing it before had become outdated. They shouldn't be doing it how they'd always done it, because their situation had changed. Now, they didn't realize that, they were throwing away, 1,500 taxes, and maybe $1,500 isn't a lot, but where I could, spend 15 minutes with them, 20 minutes with them and say, hey, if you make this change, it's going to be better for you long-term in retirement. And it's also going to save you $1,500 in taxes. And you'll feel that now versus in your tax return. They're like, oh, shoot, like that's a no-brainer.
I don't know who would not want to spend that 15 minutes to do that.
Right. And if you take that that's on the personal level. If you take that to the business level, maybe 10x it, 20x it, depending on the size of the business and the revenue. It's the same way. I have to put in a little bit of a plug as well for people who are, small, closely held business owners, sales individual, real estate agents, anyone that has income coming to them that they don't have a lot of employees. There are so many tools that are just specifically targeting you that you need to be using, that are different than, what a big business can use. If you're a sales individual or, one or two employee company, oh my goodness, and it blows my mind. It's so funny because these are the people that are just like making it by and like making it happen, and movers and shakers, and don't have the time or feel like they don't have the time to come talk to me or start a conversation with me. But, I had an individual, he does flips. And this is the last story that I'll share, just for sake of time, Krisjan. But this individual, he's funding two different things that we've set up for him now as a small business owner. That previously he was doing flips and he was doing an awesome job and making a lot of money, but he was paying a lot of taxes. And with these two vehicles that he set up, one of them is mitigating long-term taxes, one of them is mitigating short-term taxes. And each year we decide how much to fund each one of them, depending on how he does as a business owner. I would say, where before he was paying himself $40,000 a year, now he's able to pay himself $100,000 a year, and he's still putting more away than he was putting away before, and saving more on taxes than he or paying less in taxes than he was before.
Crazy.
And it just blew his mind. He's like,
yeah,
this guy that's always been taught like, hey, you pay yourself as little as possible, but he couldn't get funding. He was running into issues as a business owner. He's like, this doesn't make sense. I got to be able to pay myself and save on taxes and put money away. And so we just had to show him how. Awesome. And anyway, that's what I would say, understanding what's available to you, it's worth a conversation. If you're talking to, a financial advisor who's just trying to sell you something and isn't trying to understand your situation, just go find another one. There's so many of them out there. Like we started this conversation, you're like, there's tons of real estate agents, there's tons of financial advisors. Find one that fits what you're looking for and get the help that you need. Because it's so powerful what a little bit of education on something that you don't need to be the expert in, right? Like you also mentioned, Krisjan, it changes all the time.
Yeah.
So
Yeah.
that's my job to be
unless
boring.
you live in that world, like who has time to keep up on all of that? Nobody.
Yeah.
We've all got our own, own jobs that we do. That's, that's in any business, man. I mean, any good, solid business has the team around them. I'm not an accountant, I'm not, a lawyer. I'm not, I'm not a lot of things, but I know a lot of people that are, that I, that I surround myself with, and that what's helps make me successul. And that's what, what any good business owner should do. So Colin, man, you are a wealth of knowledge. I appreciate all the info. Tell everybody how, if everybody is watching this and wants to talk to you, how, what's the best way for somebody to find you?
Yeah, I mean, you can look me up on Google. I think our reviews are okay. All of our clients like us, but my email is just my first name, last name. So that's colin.haueter nm.com. And then you can reach us by phone number. I don't know, Krisjan, do you want me to put that on here?
No, you're on Instagram though now, which is pretty dope.
Oh, that's true. Yeah, Instagram. That is the best way to reach us. Follow us on Instagram.
A DM, Krisjan, slide into Colin's DMs for good financial advice.
Yeah, and the handle on that is going to be the Good Advisor, with that underscore between the good and good and advisor. So the Good Advisor.
And I'll make sure I'll put all that. I'll drop that on here right there so people can visually see that when they're watching.
Sweet.
Well, so
appreciate it.
Well, Colin, man, thanks again for all the time and all the info. I really appreciate it, buddy.
All right. Hey, Krisjan, it was fun. Enjoyed this. I'll talk to you later.
You got it, man.